Okay, I wanted to make a video on selling a cash secured put on SoFi. So I've been watching SoFi for quite a long time and I've been selling cash secured puts on it off and on. And the funny thing is I've never owned SoFi stock, but I've have made thousands of dollars off of it by selling cash secured puts. Now, if I do end up getting assigned the stock, it's okay. I think SoFi is gonna end up being a $35 to $50 stock sometime next year. So anyhow, I like to sell cash secured puts during dips. And even though this isn't a big dip, I think SoFi is going to keep going up between now and Christmas. So I'm not afraid to sell a cash secured put here, even though I like to see it go down maybe to the $28 range. And this I'll put at 27 or 26. But we'll see what we can do here. I've already logged into Fidelity and I just simply came up here and I typed in the SoFi and then SoFi pops up. And then you come down here, view the option chain. So I'm interested in a cash secured put. So I'm looking at puts over here. To make this a little simpler, I'm just going to click on puts and eliminate half of what I'm looking at. So now I'm just looking at, so I'm going to look at the December 26th. So that's about 3 weeks out or so. To be exact, I'm looking at, there's one, two, three. So a little bit over 3 weeks. So the price currently is 29.26. So right away, I know I'm going to look around the 27 or $28 range here. And if I look at the 27, 28, I see the sell prices here. And you want to look at the volume and the open interest. I like to see at least a minimum of 500 for the open interest. And this volume here, this will reset to 0 each day. So I want to see a lot of action because when it comes time to get out of the deal, I want to make sure there's a lot of people, a lot of activity, so it's easier to get out. I don't want to be stuck and then maybe not get the price I want to get for it. So anyhow, I could go either 28 or 27. And if you look at the delta here, I'll talk about the delta here after I do this deal. But typically, I like to have the delta like under 30. And depending on what account I'm dealing with, some accounts I don't care if I get a sign as much as other accounts I have. So I have 3 or 4 different accounts that I do options with. And this account I prefer not to get a sign, but if I do, it's not the end of the world or anything. So if I look at the $27 strike price, the delta is 27, which kind of means there's a 27% chance that the price will go down between now and on the 26th, and I'll have to buy those shares for $27 a share. So 27% chance approximately. Or if I go 28, I'll make a little extra money, but then there's a 35% chance. But I'm not going to hold this until December 26th. I'll wait until the price goes up a little bit, and then I'll get out of this deal and lock in some of the profit. I'm going to look at the chart here for a minute. So if I look at the low points, it's been as low as 25, and it wasn't there very long. And there's 27 right here. So it did go to 27 back here around November 6th, and then it was dipped down below 27 on the 14th, and then came back. So for 10 days, it was below 27. So I think 27 might be where I want to be. So let's go ahead and go 27. So sell at 82, and you have to pick an account. And I'm going to do a limit. You could do a market, but the market, you don't know exactly what you're going to get. So I like to do limit. So I'm going to do 5 contracts. So a contract is 100 shares, and then I'm going to do 5. So this is 500 shares of stock. If you look, my maximum gain could be $400. So, but the limit price is here says 82. So 81, 83, 85. I'm going to go 83. When I click on 83, my profit went up. Let's click on 85. My profit goes up. So this is what I'm going to sell this for. When you sell something, you want to get as much money as you can. This won't work, but if I put like $1 in, my profit would be $500. Makes sense. I make $1 off each share. I'm doing 5 contracts and $1 a share. I can put that in there all day, but it doesn't mean somebody's going to buy it for $1. So I got to stick here around the midpoint, around 83, 83. I'm not going to get greedy, try to get an extra $2 here. So let's preview and we'll place the order. Okay, I'll close that and I'll go in. I'll see if it actually got placed. Okay, I came up here to activities and orders, and it says it's still open. So let me hit the refresh here and see if it gets filled here anytime soon. I'm going to click on replace and see if the price has changed a little bit. So it looks like the price has come down a little bit. So I'm going to have to take a little bit less money, and we'll try this again. Attempt to replace, place order, refresh this, and it filled at 81 cents. So let's go ahead and update my sheet here. Okay, filled out my sheet here. So today is 12/3. The expiration is 12/26. That's 3 weeks. SoFi, a put. The strike price was 27. 5 contracts, 0.81 cents. The amount of collateral I had to put up, 13,500. I should do a better job leaving myself notes. So in the future, if I want to look back to see exactly what I did on this trade and try to do something similar in the future, I can. So I put in there that the delta was about 0.25 and the shares were trading at about 29.28 a share. Before I go, let's talk about the delta for a minute in case you don't know. Okay, brought up trusty old chat GPT here. Delta is one, they call it the Greeks, so delta being one of them. Number 2, the probability of expiring in the money. So if the delta is 0.20, there's a 20% chance of finishing in the money. And if the delta is like 0.70, there's a 70% chance. So we just did one that's 0.25. So that means there's a 25% chance that it's finishing in the money, meaning that I'll have to buy those shares. So the other thing it means is how much the option price will change when the underlying stock moves $1. So let's look at the put option here. So if you have a minus 0.30 delta, it will go down 30 cents if the stock rises $1. It's a little confusing. So I sold a contract for 81 cents. I want that delta, or I want that price of that contract to go down preferably to 0. Let's say 1 penny, so it makes it easier to understand. So if my contract goes down to 1 penny, I'm going to buy it back later for 1 penny, which means I'd make 80 cents per share times 500 shares is $400. All right. So I don't want the price of the contract to go up. I want the price of the contract per share to go down, but I want the price of the stock to go up. So there's 2 different things here. We've got the price of the stock, and we have the cost per share for the contract that I sold. I know it's confusing, and you have to really get it through your head. So anyhow, there's a lot of videos and explains how it's done. There's a lot of bad videos, a lot of good videos. It's just you just got to find something that you understand and then go from there. So anyhow, I'll scroll through here. You can read about it. There's some different examples here. And here's a tip for beginners. The lower the delta, it's safer, lower premium. And then as the delta goes up, more moderate. And then the delta, when it's high probability of assignment or high risk. So I wouldn't really call it high risk. So some people want to be assigned the shares of stock. They will think to themselves, like in my case, SoFi, I might be thinking, if it goes to $27, I really would like to buy it at 27. If it goes to 27, I want to buy it. I could sell a put at 27, and then hope it goes to 27, and then I get assigned. So two things: I'll make the money, the premium, the $400, plus I'll buy the shares at 27. So it's a win-win, and then I own the shares. Or I could just sit and wait for the price to go to 27 and buy it. But then I'm missing out on that, making that premium from that contract. So anyhow, I just assume not ever buying the shares. If I do buy them, I'll turn around and sell a covered call, which is kind of like the opposite. And I won't go into that, make this video any longer than it has to be. But anyhow, this is what I do. SoFi's been good. It's like a cow. I just keep going back and milking the cow. When this cow quits giving milk, I'll go find a different cow, meaning a different stock. And then quickly before I go, I have a watch list here in Yahoo. If I scroll down here, and Yahoo Finance have been acting weird today. So all these tickers here, these different ETFs and stocks are what I'm watching. You can see the SPY, the S&P 500, the QQQ are up today, but SoFi is down, which leaves me on a bullish view of what's going on with the market today. But I'm getting this at a discount, in my opinion. So then you can look at some of the other stuff I got: Uber, Starbucks, Robinhood. Those are all different stocks or ETFs. TQQQ is one of my favorites. So these are all different tickers that I'm either watching or selling cash secured puts on. Some of these toward the bottom or I'm watching. So you can make a list like this and it's sorted out. I put my favorites toward the top and put SPY right on the top so I can see what's going on with the stock market in general when I pop up here and look at things. So anyhow, hope this helps people who want to try to understand how to sell a cash secured put.